Good evening, everyone. My name is Bobby Smith. I'm the Vice President of Marketing for Forex, and welcome to Wednesday night. We have a very special guest and a special treat for you this evening. I was sharing before we went ahead and launched the webinar, the last time we had this special guest speaker, we maxed out the attendee on our webinar platform, and some folks had no choice but to watch the replay. Congratulations this evening for all of you who not only got here early, but who just made a decision to take your time to be here. Tonight's webinar is here with the intention of clarity. We all know when we have clarity and surety, when we get comfortable with the product that we are utilizing and are bringing to the marketplace. So whether you're a customer with us or you are a Forex affiliate assisting us in branding this product into the marketplace, you can never be educated enough on what this platform offers, because just when you think you've got it, something else pops up and you go, it's just another aha moment of how great this actual product is and what it's doing in the marketplace. So with no further ado, you didn't come here to listen to me. You came here this evening to meet this incredible individual. He I really don't know much more to say about him other than he really is brilliant. The mind that created this particular software, Forex, was, I don't believe many people really could have done and created this project and or had the wherewithal to take the time and the money that it has taken to put into this product. 8 years in development, over $16 million to develop. And here we are launching this product into the marketplace today. So with no further ado, allow me to introduce you to Mr. Joseph Nemeth, the architect of Forex and interim CEO of our company. Mr. Nemeth, are you here with us?
I am, Bobby. How are you?
Excellent. I'm doing terrific. Thank you so much, Joseph, for taking time out of your schedule. We have had so many requests for an evening like tonight, and I'm glad that we're moving forward and we're going to be having many of these because they're definitely necessary. Let me go ahead, Joseph, and I'm going to turn the screen over to you so you can actually become the presenter and we can see exactly what it is that you want to share with us here. You can go ahead and just click OK, and we'll just turn right over to your screen. There we are. Mr. Nemeth, terrific. We see the dashboard in front of us. Go ahead and take it away.
You are looking at one of my home computers, and as a matter of fact, I burned up 3 machines over the weekend trying to prepare for this presentation. And as you mentioned earlier, I would like to make myself available at least initially, probably once a week, maybe Tuesdays, Wednesdays, whatever seems like a better time to do a similar presentation as I'm going to do today. I have not done this presentation ever. Certainly not as a webinar, and I hope it will be very informative for people, and it will be completely different from everything that we've done so far. My intention is going to be to walk everyone with the assumption, I'm going to assume that the viewers are at least somewhat familiar with the software. Because I will not have, due to time constraints, I will not have a lot of time to go into details. But if you view the tutorial videos and come back maybe next week, then even if you are a newbie, the pieces of the puzzle will fall in place. So what I really want to do, I want to demonstrate really step by step how the software, how Forex works. And for that, I have a very similar window over here, which we call the main window or the dashboard. but it has one additional button down here that is called the simulator. And what the simulator will allow me to do, it will allow me to speed up time and give you a time lapse of everything that happens within the software in a way that hopefully will make things a lot clearer for you. There have been a lot of questions as of late, how the strategies are created, what comprises the strategies, what is an acceptable drawdown, why a drawdown happens, how does the software get out of a drawdown, and so on and so forth. So with that in mind, I'm just going to jump right in and start opening up windows. And what I would like you to do, because I'm sure there will be questions, if there are questions that you feel should be answered or need to be answered, then when I pause from time to time, I'll give you the opportunity to ask those questions. So all of the listeners, if you have questions, please direct them to Bobby, and depending on how much time we have left, we'll try to answer as many as possible. So here we are. This is our main window. This one module has this one extra window that is called the simulator. And what the simulator is going to allow us to do, it will allow us to process real data that actually took place in the market over a period of time, and we can choose that period of time depending on what data we have available or what data we have harvested. I have queued up this data, and we're going to be trading for this demonstration. We're going to be trading pound yen, and I have queued up the data to January 1st, 2014. So we're going to assume that this is the beginning of our trading sequence. And when we start trading, the data will be processed, and it will be processed very, very quickly. I will be able to speed it up and slow it down depending on what it is that we want to look at. So this is our simulator. It is like the market. Look at it as this is the market, and the market will show us several things. It will show us, or the simulator window will show us several things. It will show us the movement in the market. It will show us the equity curve on closed deals. It will show us the equity curve on open deals, and then it will show us an equity curve on the liquidation value of the account, which is basically a combination of the closed deals and the open deals. Now, in order for us to be able to trade, what we need to do is set up some trades, and we do that, as we all know, in the harvester. What I'm going to do, I'm going to move this window over here to the side, so that when I click on it, you see which window is being opened. Now, the strategy that we have over here is my latest hybrid strategy, which is a combination of a trending strategy, the Forex DAT number 5, which a lot of us have been using, and that is primarily a trending strategy. And then we have actually we have merged Forex DAT 5 in with Forex DAT 8, which is primarily a range-bound strategy. And over the past 3-4 months, we have actually been finding ourselves in very much of a range-bound market. Last few days, we have seen a little bit of movement, not a whole lot. We're hoping we'll get out of these doldrums and resume the normal behavior of the market, but time will tell. So anyway, what I have is a strategy that consists of 20 harvesters. What a harvester is, it's nothing more than a mathematical algorithm that follows the price change in the market. This particular strategy, or these harvesters, these algorithms are purely based purely on price. They do not take into consideration any technical indicators, any macroeconomic news, no earthquakes, no central bank changing interest rates. It is purely price driven. In other words, we are measuring the price change, and based on the relative change of the price in the market, in the given market, the strategy kicks in and opens trades based on the conditions that exist in the market, plus on the individual algorithms that are driving each and every harvester. Now, as you can tell, there's 20 harvesters. 10 of them are to open long trades. In other words, there are buy harvesters. 10 of them are short trades. In other words, they will be opening short short trades, or they will be selling the market or closing existing deals if they happen to be in profit. So we have the harvester set up. I don't really have a whole lot of time to go into the details of what each harvester entails. Each harvester, I will say this, is driven by advanced management algorithms that are specified in the advanced module. You get to it by clicking on the advanced button. But let's just say this is all set up, which it is. And what we want to do is be looking at the open deals. I'll open the global open deals window. This is when a trade is open. It will be automatically assigned into this window, and it will be managed by certain specifications that are up here on the upper side of the open deals window, and this is the global open deals window. The trades will also be managed by the open deals window number 1. There are parameters that are also specified up here as well, but that's not really all that important for us. What we want to be looking at is the global closes, which is ultimately what we are after. The other thing that I want to do is open the closed deals window, and that one will be down here. And what the closed deals window is going to do for us, it will show us all the trades that get closed. And some of them will be with profit. Some of them will be particularly when the global close takes place. They will be a part of a trading sequence, and there might be some losing trades as well. But overall, we are looking to grow the account, grow the equity, and add on to the account as the time goes on. So here we are. Here's the harvester. In order for us to start trading, we need to start feeding the data, and we start feeding the data by simply pressing the run button. I'll press the run button, and now the data will start. What I want to point out is that right here in this section, you have the current time of the quote, the date and time. And this will be moving very, very, very quickly. We don't have a whole lot of time. I want to go probably through about a couple of months of data in about 15 minutes or so. I will be making comments as to exactly what is happening to make things understandable to you. So having said that, let's run the data. The data is running, and what you see, basically, this is 1 minute data. So we're processing a quote from each and every minute that the market was open from January 1st. Actually, it's January 2nd of 2014. So earlier this year, beginning of this year. Now let's just start our trading, and we start our trading by simply we press on start. Now, as you can see, all the harvesters are in motion. They're either running or triggering, and they will be because of the way that these particular harvesters are set up. Once they stop, they immediately start up again. So I can close this. The harvesters are running. Now let's pay attention to what's happening. As the data is passing passing by, the harvesters or the software is basically looking for trading opportunities. And when it finds trading opportunities, it opens trades. And those trades get placed right in here into the open deals window. As you can tell, there are already 3 trades that have been opened. 2 of them are long, 1 of them is short. If you look down here in the open deals window in the summary, you see that whoops, there was another trade open. Now we've got 2 shorts and 2 longs. That means and basically these trades are for 0.5 mini lots. That's a $5,000 trade, and as you can tell, now we've got 6 of them. So that as the price is changing, the individual harvesters are opening trades. The summary is showing that we are long 1.5 mini lots, as well as we're short 1.5 mini lots. So really this position that we have right now is kind of flat. Nothing has been closed yet. It's still very early. Now what you see right here in the simulator window, you see 3 things. First of all, you see the market move, and that is this blue squiggly line at the very bottom. And basically at the beginning when we started trading, the market was flat. It went up just a little bit, then it went down, then it was flat, then it decided to go down. And as the time goes by and price changes, data changes, this market will be painting a line or a curve of that market. Now on top here you see 3 lines. One is blue, one is red, and one is green. I will pause here for just a second to explain what this means. The green line, which you can barely see because it is covered by both the red and the blue equity line up here, is very simply the amount or the equity line of the closed positions. So in other words, everything that has been already, every trade that has been already closed and transferred or moved from open deals to closed deals. And as you can tell, we're measuring this in pips. The summary of total closed deals so far is 18. We've closed 18 trades so far, and for a total of 107.7 pips in total profit. At the same time, we have 1, 2, 3, 4, 5, 6, 7. I take that back. We have 6 trades open. 3 of them are long, 3 of them are short, and we are in these open deals. We are currently minus 28 pips. So that is a total aggregate about, give or take, 80 pips. And so what you see is this: the red line is really the trades that are open. The red line it draws only the equity curve of the trades that are open. Once the open trades get closed, they get moved into the closed deals window, and that is reflected on the green line. Now the blue line is a combination of the two. In other words, that's the liquidation value or the real-time status of the account. If you were to close all of the open deals right now and basically close the account down, that's how much you would be, or the balance of your account would be. So let's continue, and I will continue. I will make additional comments as we trade. So the market is moving. It was moving down slightly, then it went up a little bit, then is going down, and this is reflected in real time on the equity lines that you see up above the market line. Right now, the market is slightly going up. We have a slightly net short position over here, as you can tell. That's why the equity line was going down. But then market turned and went down. Guess what happened? The equity line moved up because we were getting into profit. As the market keeps going down a little more, the harvesters know to open additional trades to the downside, and therefore we are trying to follow the market, or the software is trying to follow the market. So right now the market's going up. We are in a net short position. That's why the equity curve is going down. But as soon as the situation, what's the word I'm searching for here? As soon as the market takes on the direction in which we are net positive, then the equity curve will be going to the upside. In other words, above the zero line. The other thing I want to point out to you is that what you're looking at here in this calculator section is at the very bottom right here. This is the maximum drawdown from the very high to the very bottom, from the highest position that you've reached to the bottom, and this is the most number of pips that you were down at any given time. Now what I'll do, I'll pause here for just a second, because what we have here is that we have a global close, and this is what we all wait for. So basically the market decided to go in a certain direction. In this particular case it was down, and the software opened more trades in that direction. The mathematical algorithms took over, and we reached our profit. Therefore, software closed all the positions, took the profit, and basically the whole sequence starts again until the same event happens. That may be next day, in a week, in a month. We don't really know, depending on what the market is going to do. So I'll let me keep running this. I'll run it a little faster this time. As you see, the data's changing very rapidly here. The trades are being open. We are actually in the 6th day of trading right now. The trades are being opened and closed at the same time, and the same thing is being reflected in the equity curves, all three equity curves. Now I'll switch to the Forex DAT view, which is a little clearer. Market's moving down. Software is opening trades to the downside. Now the market is slightly flat, maybe trying to go up. Now it's trying to go down. We are still negative. We are still net short. And the software just watches the market. It counts the pips up and down, and when it sees an opportunity to trade, or when the conditions are present for the individual harvesters to open a trade, either short or long, at that point the trade is open, and the additional trades that are opened are being all included in the same trading sequence. So really we're not trying to open one trade and then stick with that trade and hope that market goes with us. We don't really care which direction the market goes, because mathematically we in time cannot be wrong. Sooner or later, the market is going to go in one direction, and in that direction, the software will be opening enough trades in order to execute a global close all deals. And global close all deals happens when we achieve the described or the designated profit. And when that happens, the whole trading sequence starts again. One thing to point out is that as the market from this point here, as it's trying to go up, the software was also opening, the strategy was opening trades to the downside, and therefore take advantage of that price change to the upside. I'm sorry, I said that. I think downside. I was supposed to say upside. The software was trading, opening long trades, and it closed all deals. Again, executed a global close and took additional profit. The whole trading sequence begins, and getting back to the calculator over here. So our maximum drawdown is calculated right here at the very bottom of the calculator. Right above it is our maximum margin. This is our net position. Actually, the way to look at it is through the broker view. Our max net position was 9.7 mini lots to one side, and that will allow you to calculate the margin that you would require to carry that position. Your minimal net total loss so far was minus 138 pips, which is not bad at all. The maximum achieved profit was 459 pips. Well, actually, it is 576 right now because we just had another global close. The current float, this is our open positions. That is right here, exactly what this number says right here. Minus 15, minus 14 now, and so on. It moves very fast, obviously, because the data is going pretty fast. And this current P&L, this is the value of the close positions so far. What we can do is speed it up some more. We can speed it up by removing the drawing, and let's get further down the road a little bit, and you'll see how this really happens in real time. If we were looking at this in real time, we obviously wouldn't see all this trading. If an average day brings us 5 to 10 trades, we could be looking for 2 hours without a trade taking place. But we are now on the 14th day of trading since we started, or actually the 13th. We're up about 935 pips. We've got 6, 7, 8 additional trades open, and we never really stop trading. We just keep going because the software, as long as the market is moving, the software will open trades, and whether the trade is a right trade or a bad trade for that particular moment, it doesn't really matter, because each and every trade has a built-in safety mechanism which we call trade recovery, and the software will either, the trade will either self-trade recover, or the strategy will close that trade in a trading sequence with a profit. Now, in the meantime, we might be getting into a bit of a drawdown, and I will demonstrate that right here. From this point to this point, we went through some bad market as far as our strategy was concerned, because the market started going down, then there was a sharp move up, then it was down and up. Now the software is trying to follow the market and opens trades in the direction of the market, so it can get whipsawed, but it will not get whipsawed forever. As you can tell, we had a 1,083 pip drawdown at this particular point, but we came right back out of it. and currently we're up 1,064 pips on the 23rd day with this particular strategy. So we can keep running. Bobby, if there's any questions, I'd be happy to answer them at this point.
Well, Joseph, there are a few questions, but not necessarily about, about exactly what you've been talking about tonight, but certainly some important questions. So I'll go ahead and ask a couple, and then we'll go ahead and turn it back over to you.
All right. I'll let this run for people to be able to watch, so that they can watch how the market is moving. The software opens trades, it closes trades. Basically, every strategy that we do is based on the same on the same parameter, if you will. Open trades, manage trades, close trades with profit. And it's not just one trade; it's a whole sequence. If the market goes against us or doesn't cooperate, then we build around those bad trades to fix those bad trades and close them eventually with a profit. Alrighty.
Okay, Joseph. Here is the first question. What will the future of Forex trading be as more auto traders are online? Will updated strategies and or better algorithms be required to realize profitable trading or faster response times?
We're not as much concerned about fast response times. This is not necessarily the type of high-frequency trading you hear on CNBC. Now, if we were to have 1 million traders that were using our software and trading exactly the very same pattern, it would be maybe a drop, maybe two drops in the bucket of this huge market. I think we can easily put 10 million traders on the platform without moving the market in any significant direction or have any significant impact on the market. There's just so much volume in this market. It is scary.
Mm-hmm. Very good, Joseph. I believe this next question you actually just answered in what you gave for that one, but I'll go ahead and ask it. What are the implications of all Forexers using only our strategies, especially as the numbers grow and are focused only with a few brokerages? I believe you already answered that question, correct?
Well, there's also one thing to keep in mind, that even though the strategies might be the same, each strategy is loaded into each individual unique account, and it trades uniquely on its own algorithms. Oops, I might have pressed a wrong button here. I'm going to have to close this and restart it. Well, will give me an opportunity to answer the question. Basically, what I'm saying is that each and every trader starts their own trading sequence, and that trading sequence is independent of any other trader. Every trading sequence starts with a price point at which the first very original trade of that trading sequence got entered. So if you start trading, for example, using the very same algorithm and the same strategy at, say, 1 p.m., and you open, your first trade is opened at 1 p.m., and then I come behind you with the very same software and the same strategy and start trading at 2 p.m., my algorithms will be completely different from yours because I have entered the market at a different point, and the software develops these algorithms in real time as it enters into individual trades. So people don't have to worry about that we're going to move the market or we're going to saturate the market with traders that actually are doing nothing but trading our algorithms, and then there won't be anything else. So I don't know if that is a satisfactory answer, but everybody has their own algorithm, and as a result, everybody's everybody's results will be completely different. So you will have different results, I will have different results, but the bottom line is that mathematics never lie. At the end of the sequence, your profit will be reached. You know, it might take a little while for you, maybe a little while for me, but ultimately pluses and minuses will add up to the result that we're looking for ultimately.
Excellent, Joseph. I think that was a tremendous answer. Here's another great question. Would you consider using any other currencies, any other currency pairs that have a larger daily range than the currencies that we're using in our existing strategies right now? Why or why not?
Well, when I look at the market, I have to realize that in order for me to make money and generate a profit, the currency has to move. So I look at the average daily range of a currency pair, and the more volatile, the better. Now, some people might look at it and say, oh, volatility is not good, but without volatility, we make no money. So the more volatile the currency, the better. Now, the other thing to consider is the spread. In other words, the price at which you buy and the price at which you sell. If the spread is too big, as in some of the exotics, then we're not necessarily favorable of those particular currencies. We like to have as narrow of a spread as possible and as high a volatility as possible, and that is the ideal combination or best combination.
Excellent. Now, Joseph, let's see. Here's another question that I think that you can answer very quickly. We have a lot of people that are asking, when can we start to see the existing strategies being updated on a more frequent basis? Is that something we can do? And if so, and if not, why not?
I'm not really sure I understand that question. The existing strategies updated. A strategy doesn't necessarily get updated. A strategy is a strategy. The algorithm is pretty much chiseled in stone. When changes are made, that becomes a new strategy.
Joseph, real quickly, I believe that we're talking about the strategy, the landing page, if you will, when you go to watch the DAT in action. We're looking at that's what they're talking about, those strategies that are on that page. If we could have a more frequent update, I think right now it shows that the strategies, the last time they were updated, I don't even know what the date is right now, and because I haven't been there, but I haven't looked at it in a minute. I know that I think Jamie, the last time he updated them was about 3 months ago. And we talked about keeping just the landing page with the quick overview, showing more frequent updates on that. We know that everyone can go in and actually calculate everything themselves with the existing strategies that we're showing. But is there a quick view that would have a monthly update that people could just view?
Well, I think the people who are asking that question are missing the point of what it is that we're providing here. We are not selling results of the strategies. That's the wrong way to look at it, because everybody has different results. Just because a strategy is running on one account, that doesn't necessarily mean that that is the result on each and every account that strategy is running on. In fact, nothing could be further from the truth. We are selling a concept and a tool that uses unique mathematical structure and algorithms to basically beat the market, if you will, for the lack of a better word. The markets, the FX markets are extremely challenging to an average amateur trader. In fact, most people lose money. I'd say over 90% of the people lose money in this market because they lack many characteristics that they need to have, and in order to be able to compete with the big hedge funds and the big institutions that trade exactly using these types of industrial and institutional systems that cost millions, if not tens of millions of dollars to develop. So people lose money. What we're giving them is a tool that will put them on the same level as the institutions that use the very same type of systems as this is. We are not saying that, okay, if a strategy is producing 3% a month on the average in one account, that every single person will produce that, or every single account will produce that. Over time, over long time, there's a good chance it might, but there will still be variations. So if people are looking at the results that the strategies are producing, as opposed to what the strategy does and how it approaches the market, how it manages the trades, and how it closes the trades, that is really what we want to focus on. We don't want to give people the wrong impression that if you pick a certain strategy, this is how much you're going to make. That's why we don't really want to advertise results. We want to advertise the process. Does that make sense?
Well, Joseph, it makes perfect sense to me, and I am in agreement with you. We are here to provide software and to provide a financial tool, and we can't give financial advice. We can't tell someone what to do or how to do it, nor can we tell them what type of results that they're going to receive. So what you just laid out, I believe, is just right on point. So let's go to a couple more questions.
I will add to that answer. Just because a strategy produced a certain result in the last year or last 6 months doesn't necessarily mean that it will continue producing the same result in the next 6 months, because a strategy is based on, or strategy is created for a certain type of a market. A market can be either a trending market or it can be a channeling market. If it is a channeling market, range-bound market, a trending strategy will not perform well in it. Similarly, if we're looking at a channeling strategy, it will not perform well in a trending market. Unfortunately, none of us has a crystal ball to know what kind of market we're going to wake up to tomorrow. You know, what we use mathematics as a tool to beat the odds that are stacked up against us. And these are the type of tools that institutions and big money traders use. Now, one thing to remember is, because the markets can be very shifty and have a mind of their own, and can change from if not hour to hour, certainly from day to day, that one has to be prepared for a certain amount of drawdown, and the fact that not every day or not every month will be a winning month. You can't win every month. That's the nature of financial markets. You don't win every bet when you walk into a casino. But if you're smart about it, if you understand mathematics and you can use it to better your odds, then that's a different story altogether.
Excellent. Thank you for adding to that, Joseph, which will lead me to the last question before we get back to, to what you were talking about previously. The last question is talking about the different strategies. Are there any new strategies that you are working on, and if so, when will they be available to the field?
There will be some being released before the end of this month. Probably 4 new strategies being released. They will be all hybrid strategies that I've been working on over the last 2-3 months, specifically to combat this type of a lousy range-bound, nasty market that we've been dealing with over the last few months. And it's probably the worst market of my lifetime, lowest volatility. It's reported to be the lowest volatility in the last 7 years. Certainly a new market for Forex DAT. Forex DAT hasn't been around that long in the form that it is right now. We've been trading with it for I think just over 2 years. So you know, but any challenge brings about an opportunity, and obviously we've used that time to analyze the various behaviors that the market can have, and adopt the strategies to combat that unfavorable behavior.
Excellent, excellent, excellent. Thank you, Joseph. I know everyone is very excited about strategy 8, strategy 9, you know, the additional strategies that we've been hearing about. So we just have a couple more weeks, folks, and those will all be available to you. With that said, Joseph, I'm going to go ahead and go on mute.
In fact, what I will say is, for the new traders, I will go as far as help them install the strategy that I call the strategy hybrid. I don't know what number it will have once it is released, but it is very, very similar to what I'm demonstrating, and it performs well in a trending market as well as a range-bound market, due to the fact that it's a stacked strategy, and each and every trade, in addition to being a stacked trade, does have its very own trade recovery. So it would have to be a very unique market behavior to surprise this particular strategy, because it looks at both types of markets and knows how to dig out of a hole in any one of those markets.
Awesome. Well, I know everybody can't wait for that to happen. So get that strategy tested and proven so we can get it out to everybody. I'm going to go ahead and...
I've got about 2.5 years worth of simulated testing on it, as you were looking at right here, and the most I have seen is about a 30% drawdown from peak to bottom, and that to me is very acceptable to me as a trader. Anyway, I've been trading these markets for many years, and you just have to be prepared to have a drawdown. The point is, if you can't stand the heat, you know, you shouldn't spend a whole lot of time in the kitchen. In other words, get out of the kitchen if you can't handle the heat. Bottom line, because look, Bobby, look at it this way. These are financial markets that offer the greatest wealth known to mankind, if you will. Mm-hmm. If you think that this was easy, everybody'd be doing it. This is not easy. This is hard. And it's not just a little hard. This is very, very, very hard. That is why only a few people in the world are able to master the market. And those that can will amount the greatest wealth known to man. Now, what the challenge is for us particularly is we're bringing this type of technology to general public, and the general public has been told primarily every time they turn the TV on that, you know, if you make any more than 3% a year, it's too good to be true. Well, it's too good to be true for us, but it's not too good to be true for Warren Buffett and Stephen Cohen and all those guys that are making 50, 60, 100% a year. Well, there is a way for people to attain that, but that also comes with a different behavior. You need to understand what it entails to be successful as a trader. And you need to be able to accept the risks and the challenges. And not every day is going to be a winning day, because if it were, again, it would be for everybody else as well. And just keep that in mind. Trading is not a 60-yard dash. It is a marathon after a marathon after a marathon. Warren Buffett didn't become who he is overnight, not in 1 year, not in 1 month. And just keep that in mind, and understand the software. Spend as much time as you can coming to seminars like this one, looking at our accounts that we display, or the different strategies, as well as the tutorial videos, because they really do make it a whole lot easier to understand if you want to understand it.
Excellent. Well, Joseph, was there anything else that you wanted to share with us from your screen, or are we prepared to close off and invite everyone back next Wednesday evening for round 2 of a simulation of one of our accounts?
Basically, what I am trying to demonstrate is that it doesn't really matter what the market does. If you've got the right mathematical algorithm and adequate capital to handle the drawdowns, it's virtually impossible to lose money if you know what you are doing. But it takes patience. And what I'm trying to further demonstrate is for those people who haven't gone through many of these cycles, that the software seeks out profits regardless of in which direction the market is going, and with a little bit of patience, those pluses and minuses add up. Just like you have a drawdown at time, you will have a profit. Now, if we can work through the drawdown, then we will capture the profit, and we just keep capturing a profit after a profit after a profit after a profit. And this is a good way to understand how it all works, how the software works its way out of any situation it may find itself. For example, right here we're 430 pips down, and only 274 pips in profit. The market is not cooperating. It is zigzagging, going back and forth, but I guarantee you that it's just a matter of time, and a few more trades and a little bit more market move in one direction or the other, when our numbers will overcome the negative trades, or our positive trades will overcome the negative trades. As the market changes, the software knows how to add to each side of the position.
Joseph, one final question before we go ahead and call it a night this evening, and it's a biggie. And the question is, would Joseph be willing to share the simulations for each of the strategies that we provide on our website, so prospects and users like me can access which strategies might appeal to them better?
When you say, would he be willing to share the simulation, I'm willing to share pretty much anything at this point. At this point, I just need to know what specifically it is that the individual is asking for.
I believe, Joseph, what he's asking is, as we're watching the simulation and the speed of how this is working right here, where you can actually go side by side with the views that you're looking at, is there any way we can actually hook this new exciting simulation tool up to the 6 strategies? Or is that part of what you and I are going to be doing, a series on each and every week with each and every strategy that we already have on the board, so we can record it from past history to today?
Well, I don't know how we'd be able to make the simulator available online to people to run the simulations. What we can certainly do, we can, with each strategy, we can take a strategy and we can simulate it in addition to running it live, so that and I understand what the question is. When you open up the account, you're looking at it. You might open the open deals window or the closed deals window, and it's like watching paint dry, right?
Exactly, exactly.
You don't know what's going on. Whereas over here, you see exactly what's going on. Well, I think I burned out another machine. This was one of my backup machines because I burnt out my main one on the weekend. But if you can see in this gray shaded area how the market was not cooperative, going against us. Every time there was a reversal here, reversal there, then down, up, down again, then up, then down, and it was drawing us down. But it's just a matter of time when we broke out of it and closed all deals again right here. So what I think we'll be able to do is take a strategy and record a simulation and put a video of that simulation on the website as opposed to having a live simulator. I just don't know how we would integrate.
Well, if we could have even a recording of that, I know that would be a tremendous tool and of tremendous assistance to everyone, because most people are used to seeing what you're seeing in the simulator here. They're used to seeing the candlesticks, the highs, the lows, being able to track the market in that manner. And when they go into how we view the open deals, the closed deals, and as you said, it's like watching paint dry, having that simulation, even if it's recorded, Joseph, I know will be of tremendous assistance to everybody.
Well, we can do that. It'll probably take some time to do it, but let's shoot to have that done by the end of the month. Have at least couple of serious simulations for a couple of different strategies.
That as I'm watching everything come in on my board here, my question board, it's yes, 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 that's what we need. And so people are very, very excited about that because prospects and buyers do want to see how it works. And that's the most important thing. We can't talk about results per se because we don't know. We can't, tell people, as you had mentioned earlier, Joseph,
and
this is what's going to happen.
It is not our intention to sell on results. We sell software that allows people to have a chance in the largest marketplace in the world. I mean, how will you compete against institutions that use $10 million software and hardware setups? How are you going to compare? How are you going to compete with them? And it's not really even about competition, but how are you going to trade the market that trades 24 hours a day? How are you not going to be able to sleep? Or how are you going to be able not to sleep? These things. It is impossible to succeed in this marketplace if you don't have the right tools. And this is one of the greatest tools available, if not the greatest tool available to a retail trader, which is a trader like you and me.
And you will get no argument from me, and I'm sure that I could open the call up right now to several people who I see on the webinar that are in 100% agreement with you, Joseph. So with that said, why don't we go ahead? We've been on the webinar for an hour now. Let's go ahead and close this off, and let's make sure that we are all back here next Wednesday night for the second round of simulation, understanding, and really just continue to push forward as we really put and bring to the market everything that's necessary.
All right, sounds good. I will go as far as to say that those people, those folks that are serious as a heart attack in learning how to trade in a way that actually beats the market as opposed to them getting beat by the market. If those who signed up for my boot camp, I will include the simulator, a copy of the simulator in their training. But this is
Wow.
just this is only for the very serious people that want to devote a good portion of their career to foreign currency trading, or possibly trading other securities as well.
Excellent.
But
Well, go ahead, Joseph. I'm sorry.
yeah, so we'll be back here again. What I would encourage people is, if they have questions on what they watched today, also on what they would like to see in the next seminar, if they have specific requests to simulate a specific strategy, please forward those to Bobby, and we'll do another one next week, and hopefully I'll have my main machine back online.
Excellent. Well, before I go ahead and close off, first of all, I have just put my email up, and if you have any questions, or as Joseph has just outlined, feel free to email me. Second thing is, I want everyone to know that is on this webinar tonight, indeed, this webinar has been recorded, and every webinar that we do within 48 hours of its recording is posted on the Forex Stat YouTube channel. So make sure that you go back and watch this, not just once, twice, but 3 times, so you can really get a very, very clear understanding of who we are, what we bring to the marketplace, and how fortunate you are to be here with us at this point in time, so you can absolutely fulfill your financial dreams. With that said, this webinar is officially over. Thank you all so very much, and we'll catch you again next week. God bless and good fortune. This webinar is officially over.
Good night, everyone.
Good night.
All right.